Okay, ladies and gentlemen, welcome back for the coffee break. I have a couple of important housekeeping announcements. First off, I know you're all relieved, and I've seen many of you carrying them around. The ISDA bags are here. I don't know what Mary Cunningham had to do to the customs officials this time around, but we have the bags. They're upstairs. Please collect them upstairs so you can add to your collection. And Mark, this will be like your 32nd bag. Lucky for you. The other important housekeeping note is please book your travel today. We're prepared to announce, I think it's been flashed up on the screen, April 23rd to 25th, the ISDA AGM for 2018 will be in Miami, Florida. So book that travel today, get those beachfront homes, book the golf, the whole thing. We look forward to seeing you in Miami. So let's get back to the business at hand. We have a technology panel here. It's entitled Market Innovation and Technology. What can we expect from the future? The market has been inundated. You see interesting headlines, people talking about blockchain, talking about new solutions and innovation. But what we're really dealing with here is a market in transition. And the market is facing significant changes as a result of the regulatory reforms. The current structure is still evolving, and we are facing significant challenges due to the existing and inefficient market infrastructures, which I kind of laid out in my opening remarks yesterday. And we think the system could benefit by a complete upgrade and automation and new innovation. But you can't have automation and innovation without standards. And we want to talk about standards a little bit here. We want to talk about technology here, and we want to talk about innovation. And we have a great panel. You can see their names up here, but I'd like to introduce them. We have Mike Gill, Chief of Staff and Innovator-in-Chief, I think, hopefully, if we can get the CFTC, the government entity, to move forward with these things. We have Dr. Lee Brain with Barclays, Jack Haddam, Managing Director of BlackRock and a member of the ISDA board, Ari Studneitzer, Managing Director of Architecture and Product Management at CME, Cyril Cotu, Head of Electronic Market Making and Commerce at BNP Paribas, and Chris Childs, CEO and President of DTCC, our tech company up here. So, first of all, we're going to start with get your apps out, break those out. We're going to do another round of voting here. The question at hand, you can see right there, will DLT have an impact on post-trade process? This is just a framing question. I want to get a sense of where the audience is on all of these questions. Then we're going to ask our panelists, because I don't have a crystal ball. I have no idea how this is all going to play out, and I can't predict exactly how markets are going to innovate and adapt to the new environment, but we do know it can't remain the same way it is today. So we're going to ask our panel help us define our future state and what they think. And we, as you know, we do have a range of experts here, large panel, but a lot of perspective, buy side, sell side, innovators, and we'll have the regulatory perspective as well. So the first question for you is start voting on this, and we'll let you kind of run that vote a little bit, and I'll put up the results, and then we have a second vote for you as well to see how your thinking might be changing a little bit. But while you're working on that, let's turn to our panel of experts and get their opinion on when and where and how innovation will manifest itself in the derivative space. And so I'm going to ask the general premise. The general question I have for our board or our panel members here is, what are the biggest market structural changes? What are the opportunities facing the market today? And how do we identify and develop transformational solutions that can improve the existing system to facilitate market innovation and automation? And so I want to unpack these questions in kind of a timeline. I like to take it in a little more bite-sized increments in kind of a short, medium, and long term. So in the short term, I'm thinking the next 3 years. In the long term, it's kind of that 5-year time frame, and then in the long term, 10 years. What can we expect within the market? Which is, consistent with kind of the question here. So how do we think about this? This is a specific DLT. We'll come to the other innovation in a minute. But let me go to see if we have results here. Wow, I didn't expect that at all. Wildly optimistic for the DLT. Well, the panelists can reflect on that. But let me start with somebody who is familiar with the DLT, Let me turn to Lee Brain, who is familiar, who quoted earlier in the last panel yesterday on smart contracts, but you've also done a few demonstrations. How do you think about market structure innovation and opportunities in the short, medium, and long term?
Sure. So we've been looking at some of the key challenges in market infrastructure from a fintech perspective for about 2 years now. So rather than starting with a business problem, which is the traditional approach, we've also been in parallel with that, liaising with many startups and many innovators. And the routes have been many. For example, as part of our accelerator program, where we've got buildings around the world, we invite in innovators, thinkers as technologists in order to provide us with inspiration. One of the key areas has been distributed ledger technologies. So about 2 years ago, we started delving into Bitcoin, what's underneath these virtual currencies, and in common with many other banks, we were discovering that certain technologies and themes underlying that are what's the special sauce. So looking ahead, it's useful to start a year or two ago. And during that period, we were able to find, from an architecture perspective, a legal perspective, that there are some really special things in this distributed ledger technology idea. But there are also some things that we don't like and we don't think are appropriate. So we almost treated it as a tasting menu of technology ideas. And we're able to collaborate with other banks and with the fintechs to help refine these propositions. The intention being to get something that was suitable within banking. At the moment, if we're doing a checkpoint now, I would say we have a whole plethora of different technologies. From an evolutionary point of view, it's almost like a Cambrian explosion. You've got all this variety and all these variances that you can look at and explore. And that's great from a research perspective. But looking forward to delivery, we need to consolidate. We need to have, rather than a whole variety of different standards for data, we need to be able to rationalize those. And it's similar for business process logic as well. So when I look at that chart and see the things on there, I map to the things that we're involved in currently. So for example, there's the DTCC with its CDS and TIW work using Hyperledger. And that has a target of about 1.5 years or so for go lives. So that falls between A and B. Other things such as CLS, where you have the FX payments netting using Hyperledger. And that system there is, again, looking at a next year for an initial go live. So what's interesting here is you're not necessarily looking at when fintechs will go live. You're looking to the major financial market infrastructures, where the banks are members of those as consortia. And I think that will be leading the way for some of the major initial go-lives. So I would agree with what's on there as B of being some of the initial tentative first go-lives. But for the major reforms, the ones where we can get the major benefits, securities settlement, etc., I think that will be slightly longer and it will be going from the B to the C. So from our engagement, strategic investment, etc., I think we're aligned with what the audience has polled here.
Thank you. Chris, your name's already been invoked as a DLT user, so what do you think about this?
Actually, sitting on a panel talking about distributed ledger with Lee is either difficult or easy, because you just have to say whatever he said. But I actually think that, I actually do agree that it depends on what you mean by an impact, because there will be an impact, hopefully, because we will be going live into a real production sense of using distributed ledger technology in the CDS space. However, if you look at the CDS space, that is the one asset class that already had the trade information warehouse and so was largely standard and was probably more efficient in process than some of the other asset classes. And we can't go forward with the other asset classes until we address the standards issue, which you alluded to, Scott. So I think that in the next year, there needs to be an acceleration on the work on standards. so that we can then embrace the technology. The only other thing that I would add, I think, to that is that I actually don't think that this is a technology issue. Even though, as we're rolling out distributed ledger technology in the CDS space, we are coming across the fact that the technology may not be quite as mature as some of the proof of concepts would have led us to believe. I do believe that all of those things will be solved for. I think the technology will exist. So I'm more interested in the level of collaboration that may be required in the industry and the governance process or processes that may be needed if the industry is really going to benefit from the technology. Because if we don't have that right standards approach, governance approach, and collaboration, we may end up with just another level of fragmentation using new technology.
Thank you, Chris. Cyril, how do you look at this?
So we are definitely very involved, and we've done some investment, and it's part of our labs per se. Blockchain is definitely a theme, but to tell you a bit more about how we do it and what do we do concretely, I'd like to step back a minute and say that it's actually, blockchain is just a small part of everything we look at in terms of innovation and technology and how the world is going to change. So I guess the way I look at things today is we have a big regulation drive and push, and we have a fantastic technology innovation. I actually believe the next 3-5 years are very, very exciting years to come. The changes that are going to happen are probably bigger than we've seen in the last 10 to 15 years because of those new technology. Call it HTML, call it open source, call it blockchain, call it API, where everyone wants to connect to everyone, whether it's system, liquidity, what have you. And then we have a lot of legacy situation with global banks such as ours, and I'm not ashamed to say it, whether it's technology, whether it's our inability to have all the resources we need, whether it's our culture, where we have so many people running businesses that have been doing businesses in a way that is going to change drastically and are resistant to change. So the way I think about change for a global bank is really 3 main pillars, and blockchain will insert in those pillars. I will tell you what in a minute, but those 3 main pillars for me are automation, convergence of technology, streamlinization or end-to-end process. The second is about data, and we all know data is a big theme, but we've been missing it so far, and we probably have years to work to get it. I'm talking data, I'm talking big data, I'm talking intelligence, artificial, deep learning. This is the second big pillar for the industry. And the third is the journey. And what I call the journey is the customer journey, the way we cover customer, the way salespeople are working, the way traders have access to the market and to information. This is what I call the people journey. And blockchain is going to impact potentially the 3 of them. But my view is, and it's back to the journey, it's so important that as global bank and serving a global franchise, the first thing we need to really understand is where do we want to go and how the service needs to improve to really serve our people and our franchise. It needs to be driven by clear business needs as opposed to, hey guys, it's a fantastic idea, it's a fantastic new technology, let's invest millions and see what comes out. I mean, there is potentially a part of that, but really the way we want to see it is very pragmatic and very concrete. So I tell you, we have already developed with DLT technology some application on the private side of the blockchain, but we have already developed. We have some applications that are live, that are minimal, that are in the POC, proof of concept mode, but it's happening and it's proving extremely valuable. Difficult to see where it's going to go and if it's going to be massively scaled, but so far it looks relatively good. And we obviously are part of industry initiative and working with the industry. But back to the point, I think it's been somewhat mentioned between the lines, the industry needs to sit down together and really understand what are the common goals and how we can leverage that technology on a very concrete, precise example. I believe, exactly as it says that in the survey, I believe it's too early. I believe in the next 3 years, if banks can look into their needs individually and look as an industry, I believe blockchain will find its way. It's going to be iterative, and it will most likely end up in a different situation and application that we can think about today.
Before I move on to Mike or anybody else, what I'm struggling with is when we talk about having an impact, right? That's broad, but is it going to have an immediate impact on the entire suite of trade processing, or are we talking about limited applications, working through proof of concept, or is this going to be a big bang moment and we're all going to move to the blockchain?
I mean, I do not see a big bang. I absolutely do not see a big bang. I think it's going to take time. It's going to be iterative. It will happen.
Chris, I mean, you've explored in the CDS space, and not explored, you're demonstrating it, I get that, but how do you see, what does impact mean in the next 3 years? What do you see the scope of this?
Well, and I mean, the scope of what we're doing right now is just really replacing one infrastructure with another infrastructure that can be distributed. For firms to really get the benefits of that, there's a couple of things I think that you need to add to what we're doing. One is the desire for my clients to take nodes on the network so that they can benefit from the distributed ledger, which probably won't, it will happen over time. And in the interim, then people will be interfacing to my node, the DTCC node, just as they do today. So it will be a relatively small impact to start off with. I think the other thing is that when you think about CDS processing, what the TIW does is basically calculate cash settlements and do credit event processing. So it's not upstream from that in terms of trade execution or confirmation. It's not downstream in terms of collateral processing and compression. So this first implementation, which as Lee said will be next year, will have an impact, but not a huge impact.
I think that's important to kind of help understand. Mike, do you want to reflect on how the regulators look at this?
So first, let me put the standard disclaimer out there. My comments will be my own and don't reflect the Commissioner Giancarlo or the CFTC, which is a strange disclaimer to put out because now I'm going to talk about what we're thinking at the CFTC.
We'll just forget you ever said it.
One of the benefits of Acting Chairman Giancarlo having served on the Commission for 2 years in the minority is that you get the opportunity to sort of observe the inner workings of the agency without having any responsibility on being responsible for what goes right, what goes wrong. But if you look back to his speeches and comments over the last couple of years, innovation, fintech has been a constant theme. And he has been disappointed with the technology within the agency, and he's been disappointed with our ability to communicate with the fintech community. And so one of the initiatives that we'll be undertaking will be a more open door to innovators and an ability to receive folks who look at our rules and the rules don't quite comply with what they're trying to do with their technology, and rather than being immediately turned over to the general counsel who will tell them no, we hope to at least do some triage and figure out if this is something that we can work with as an agency. We sort of look at this in two tracks. One is, what are the rules that we have in place that may be inhibiting fintech? And then further down the line, a couple of years down the line, we hope to have the ability to have folks in-house that are able to sort of speak the geek speak and not just the legal speak when it comes to fintech. I think Acting Chairman Giancarlo said it many times. We'd like to treat fintech, shared ledger technology, blockchain the same way the government treated the internet in the early days. You know, first, do no harm. I think in our stage now, it's difficult for us to look at our rules wholesale and say it's rule 6.76 that's going to inhibit shared ledger. We need innovators to come up with the brilliance and then identify within our rule set. The one thing that we are cognizant of the fact, though, is that as we go forward and government will always be making more and more regulations, we want to have these types of technologies in mind, and so that we don't set something up that in the future will be an inhibitor to shared ledger. And that's the construct of where we're going to approach this over the next couple of years. I'd like to think that our goal is to be more open to innovation. We are not a small agency, we're an elite agency. And so we hope to bring, I think, the acting chairman's enthusiasm for technology to our interactions with you.
Thank you. Jack, the perspective of the buy side, how do you see this playing out?
Yeah, thank you. Well, for starters, I must say I appreciate Michael's comments, with regulators being open to feedback and really a willingness to listen to the needs of the clients. Because at the end of the day, I think that's what FinTech needs to do, is to be listening to our clients' needs. So from an asset manager perspective, in a portfolio management chair, my challenge is to help our clients meet their needs. So when I think about the challenges that we're facing right now, you have growing basis risks in the markets. Yesterday, many people noted on the panels the growing basis risks in the markets. I think about, as we're going through benchmark reform and the introduction of alternate benchmarks, every new node in that trade decision tree exponentially increases the complexity. So that's just one example of how we're looking to leverage technology at time of trade, to optimize things and to really help our clients achieve their goals. So it involves standardization, it's about optimization, and really being able to leverage that technology at time of trade. It's not about using data backward-looking or even post-trade. It's really empowering the front office. It's empowering our traders at time of trade with that information to make a better decision. With respect to DLT, listen, I think we're in a bit of a wait-and-see mode. I think the big takeaway from my perspective is that this has real potential. There are a lot of questions that remain, but the fact that we're having this conversation, what it does, it raises the awareness, what it really should do as an industry, it should catalyze all of us to really raise the bar as we rethink optimization.
Thank you, Jack. Ari, CME is a technology company as much as it is a trading company anymore. Innovations in trade execution and straight-through processing, et cetera, largely from the future space. How do you bring value to this market?
Echoing Jack's comments, for us, technology is not the goal. We look at technology as an enabler to help us solve our customers' problems. And exactly as Jack was talking about, I think there's a real risk that people look at DLT and they say DLT is the goal. It's not the goal. It's an enabler. It's an enabler to solve real problems. And I'll give a simple example. We've been looking at DLT since 2013, but for going to market, we heard a lot of challenges around the ability to manage gold and the challenges of the cost to be able to store it. So we partnered with the Royal Mint, and this year are bringing Royal Mint Gold to market. Yes, it will be using a chain, but the chain is not the goal. When we talk about innovation, we talk about product innovation. We talk about solving our customers' problems. It may be using a chain, but we're not focused on that. And going forward, for us, it will be about solving customer problems. We've heard a lot about liquidity challenges, collateral challenges. We're looking at technology to solve those issues and ensure that we're focused on our customers.
Okay. I'm as optimistic about technology as anybody. However, we still have a massive amount of regulation that still has to be implemented. We're facing down MiFID II requirements, potential changes to the CEF rules. We want to integrate on a cross-border basis, trade execution. We've got still some clearing mandates to bring forward. And a lot of this is really pretty clunky. We've had straight-through processing mandates to really drive down exchange of collateral and all of these requirements associated with the non-cleared margin rules to move the collateral on a T+1 basis as dictated by regulators. So we still have kind of some very important, difficult technology rule implementation to get done in the next year. So how are we going to focus on getting DLT potentially within 3 years, having a big impact like the crowd seems to think, and implementing some of these significant MiFID reforms? What do we attack first? I really do like Cyril's point that we've got to really kind of come back to some important data standards, process standards, et cetera. how does, we've got 800 people in the audience. How do they need to think about attacking this problem, both, thinking about the future in DLT, but, kind of dealing with what's squarely in their face in the short term? Yeah. Go ahead.
Sure. So we've been looking at really how to rationalize the operating platforms. And it all goes back to the key idea that you want to reduce the number of these parallel different systems that are operating on data in different standards and formats using business processes that are implemented in different ways. Even for the same process, we may be simulating in the bank what a clearinghouse is performing in actuality and reconciling between the two. So despite all these mandatory pressures to deliver, it's necessary for the banks to also allocate appropriate resources, which may be data architects, business lead architects, etc., to in parallel ensure that we design the future correctly. What we don't want to do is remain tactically focused on just the implementation of the short-term regulations. We need to look longer term and make sure we design the infrastructure, the data standards, to leverage all these benefits that people talk about when they're often mentioning fintech, blockchain, distributed ledgers. If we don't design it properly, if we don't allocate our resources to it, we're going to end up with a heterogeneous network with not just our current systems, but a variety of new systems that don't interoperate. So there's some tough intellectual challenges, there are some data standards, there's engagements with the communities, there's a whole set of things that I think the banks and other players in the market need to work together in order to ensure that the next generation of these systems are designed to be simple to interoperate. I think we've got a special opportunity at the moment. Fintech arose 2-3 years ago and gave us a little bit of a kick, a bit of an inspiration. The banks started engaging with all of these small firms. And I think they've kind of inspired us to design things properly going forward.
Cyril, Lee brings up a very good point. We've made a lot of tactical developments, responding to the regulations, getting them in place, rule after rule, not thinking strategically. Maybe you can pause a little bit now, even once you have, I'm sure you have MiFID all in hand. That's probably not a problem for you guys, but but it might be for some of our guests here. But how do you think more strategically? What has to happen to bring the industry strategically along this journey so the entire industry can move forward?
You mean overall or specifically to answer regulation? You mean overall or specifically within the new regulation framework that is being...
Overall.
So, I mean, to the risk of repeating a bit myself, I think for a bank itself, actually the first key thing to get it right is to understand where it wants to go in terms of franchise strategy, and then to understand across all those new paradigm and new technology, which progress, which stream is going to answer to which specific needs, whether internal or external. Now, of course, there is a lot of challenges around that, and I mean, just to mention some of the regulation challenges, Dodd-Frank and now MiFID, they are often on the extreme side of regulation that they want to push through with regard to transparency. But in the meantime, I guess by being very vigilant and being able to communicate, the market itself, after a few iterations, find itself, but there is on the way some roadblock and definitely some trap in terms of could impact liquidity. Too much transparency could impact liquidity or could discourage market maker. So what we need is we need to be very pragmatic as an industry. We need to be very coordinated and very transparent in understanding our marketplace and its limits. And I'll give you an example of that, right? I mean, if you look at equity market and if you look at the electronic trading transformation of all our market in the last 10 years, equity market is you are in a market that basically transact tens, if not 50s of millions of trades every day. Now, if you look at the second very much electronified market, which is foreign exchange, which has been electronified for the last 10, 15 years, you are talking maybe about millions of trades every day. Now, and you will understand where I'm going at, right? Now, if you look at cash bonds, which has been electronic for, again, probably 10, 15 years, you are now talking about thousands of trades, maybe 10,000s of trades. And if you look at derivative, and I'm talking electronic trade, but that actually gives you an idea about what the overall marketplace is, you're only talking about a few hundreds or maybe thousands trades. So I'm talking about IRS, I'm talking about CDX, I'm talking about fixed income derivative product. The point I'm making is that the day you want to think about a central limit order book for those derivative contracts, you are going to face major market structure burden, and basically you will not have a fully efficient, transparent, liquid club in those derivative contracts where everybody can eat everybody. So you end up by having to make iteration to face and to match the real liquidity, which end up by being provided by 10 to 12 houses. And the straighter or the more difficult regulation in terms of transparency cannot address that. So what happened is, after months of iteration, the market find itself in a way that match banks' needs and regulation requirement. But all that meaning is going to be the years to come, especially in MiFID, where we still have some gray area. We need to be very transparent and pragmatic, both regulation and banks itself.
Maybe we can get Chris and Artie weigh in. You know, you're serving customers, you're trying to develop solutions in the near term to help them transition to meet regulatory requirements. You know, in the short term, what's the best way to help everybody comply with the rules and move out of the tactical investments into more strategic investments?
So I think that, by the way, that question is always a dilemma, no matter what stage of business you're in. How much can you put onto the tactical versus looking in the future, investing in the future? How can you even predict the future to put that investment? So I think that's always just a business challenge anyway. I can tell you what we've done is we've reached on the trade repository, which is where all of the reporting takes place. We've reached a stage already where we think, believe it or not, that we've stabilized enough that we're going to reinvest even more money into that. It's kind of kludgy the way it works at the moment because of the way that the regulations were written and the way that we had to build this together with the industry. So we're already going into not distributed ledger, but we're using technology to reduce the cost of running that, make it much more user-friendly for our clients, and working on the quality of the data, which was mentioned obviously a lot on here. So that's a 2-year investment, but for the future. So we're doing exactly what you said, which is trying to use technology now to improve our client experience over the future and to try and make the quality of the data much better and make it much more usable. And an example of that, by the way, was mentioned this morning, which is we believe that we can use a lot of the data that's being reported to the trade repositories to help out with the implementation of FRTB. So there are some things, and that's a kind of 2-3 year horizon that we're looking at in terms of the re-architecture of the platform. We're also using technology for better movement of collateral, interfaces with Acadia. So that whole investment as well, which is being funded by, the industry and vendors, will definitely make dispute resolution much easier, collateral movements much easier. So I'm not sure if that answers your question, Scott, but...
It does to an extent, but unpack that a little bit. So collateral's a process innovation, right? You talked about the data. Cyril talked about data. He talked about process. Collateral's a process, and I know we'll ask Ari to reflect on collateral as well, but what is the innovation around collateral, and what's it going to take to make that easier?
I don't know that it's hugely innovative, other than obviously optimization of different pools of collateral so that you can use the collateral in a much more efficient way is fairly innovative, and you need technology to do that. But it's not like hugely new technology or anything, but it is process automation to help the industry get through a particularly onerous piece of regulation.
Considering right now collateral is managed by an Excel spreadsheet and email,
Yeah, I mean,
we could use a little innovation, I would think.
Exactly, and it does show as well where there can be interoperability between various vendors to come up with a solution. It doesn't have to be that the solution is provided just by one vendor. If you think about the interfaces between DTCC, Euroclear, Arcadia Soft, so it was coming together of a pool of resources, as it were.
But I mean, there is clearly, I guess, an issue of standardization coming on, right? And that issue of standardization is accelerating with the new regulation coming on and the growth and needs of data and transparency, as we mentioned. And we've seen in the past that usually dealers themselves are not too good, are sitting themselves together and agree on standards. So usually it's coming from third-party vendor. I mean, eventually some consortium, they will put them together. But actually, I mean, as it was mentioned, some of those fintechs can come to the marketplace and actually spot that need for standardization and put us together, although we should have done it together. But there is clearly more standardization needed. This is a theme, whether it's data, whether it's processing, whether it's messaging, and that's something we should collectively think about to address better. That's clearly a theme.
If I can jump in really quickly, Scott, I think for us, as I talked earlier about technology and enabler, focusing our customers, it's about making it easy. But I'll give two really easy examples of what we try to do, is that when you trade on our exchange, you shouldn't have to worry whether or not your trade's going to be reported. So for us, we automatically report that trade on your behalf. When you talk about MiFID and the importance of reporting, the same concept. When you trade on our exchange, we enable through our technology the ability to report on your behalf. It's not something you have to worry about. Likewise, when you talk about collateral and the spreadsheets and the VLOOKUPs that go into it, it's not something that you should have to worry about. If you submit the collateral to our exchange, we optimize it on your behalf. We have technology, we have real-time clearing. We actually optimize the collateral that we apply based on the optimization behind it. So I think those are some examples that I think we as an industry can do better on, and we will continue to do better on, and make sure that for the end client, we're making life easier, and that we can get on to not having to worry about regulations, but really focus on the importance of risk management and the very reason that we're here.
Yeah, well, one thing to add to that, also from our perspective, it's a little bit about a change in behavior from the trader, because empowering your trader with technology at time of trade, whether it be about collateral, margin efficiency, at that time of trade, it's a change in behavior. At this point, for so long, it was all about that price was that single dimension by which you'd gauge best execution, and that's not the case. So as you've moved something like collateral from a back office function to the front office, empowering and leveraging technology just means you're getting the most optimal result.
Yeah, I would like to think about what I see as well, but that is, I would say, more exciting, more fun. Because I think, as I mentioned, like the journey is a key thing that I see drastically changing. And if we step back a bit from regulation and collateral and blockchain, I see the way we interact with our franchise changing literally, because there is going to be bot coming. I mean, you probably have heard about bot and intelligence artificial and LNG, but I see much forward than that. I see voice drastically changing. The usage of voice is going to drastically change because, think about it. Even though we are not ready, I see massive change. Let me give you some concrete example. So first of all, I guess all of you are shopping on Amazon, right? Or most of you are shopping on Amazon. But how many of you are using Alexa? Do you know what Alexa is? Are you using Alexa? So Alexa is their bot, right? It's basically a bot you talk to, and you say, please buy me that book and make it deliver to my home in 3 days. But what I mean by that is with new technology, voice will transform into text automatically. Voice will communicate with bot that will execute, that will find for you what you need to do. So you imagine, today Symphony is a big change in the marketplace. You probably have heard of it, collaborative chat system. but everything will be linked to voice. So imagine through a portal that will communicate with all of us, you'll be able to route your request by voice, be answered by voice, booked by voice, and everything will be recorded, everything will be monitored, everything will be surveyed. So these changes are going to happen, will make all our lives more efficient, right? So
Well, you've just
I can keep going on
just
and on and on,
front-run
right?
the next question for the audience. Well, let's get on with the next question for the audience, but I do have a poll question for the audience. All right. What is the biggest technological priority for you? We have an artificial intelligent piloteer that kind of Cyril has just raised, but I have an interesting question for the panel from the audience, sent anonymously. But can the panel give some examples of the parts of the derivative life cycle in which DLT will be used, negotiations, execution, confirmation, settlement, collateral, et cetera? Will these purely back office support functions, or will they involve both parties using the same technology? So where does it, we talked a little bit about what is the use case, where do you think the best case? And let me just go down the panel while our audience is responding to this. Let's answer the use case question.
So just over a year ago, we demonstrated a prototype in London. It was at the O2 Arena. There were 800 people there, and we showcased a vision of the future, the way we put it at the time. And it wasn't a particular point in the life cycle. It was the entire life cycle for a derivative. And we demonstrated for the original going from a standards body, so downloading from a trade association the master agreements, negotiating it with your counterparty, then through the confirmation steps, and then the execution, the performance of that contract on a distributed ledger. That was an end-to-end view. We only proof of concepted it at a high level, but the vision was to show that if you had straight-through processing from the beginning to the end, you had a common data structure, you wouldn't need to keep transforming it and introducing errors as you process through the life cycle. So we showed these 6 key steps interlinking. Undoubtedly, there are different degrees of business benefit at each step. For example, if you're looking at the legals and our front office ISDA negotiators and so on, you'll be able to, in my view, give a radical benefit in terms of transformation. However, if you look later down the life cycle, that's where the really enormous potential rationalization benefits in terms of infrastructure cost saving. So I wouldn't discard any point in that life cycle. I'd say we need to address all of them in parallel, and there can be different groups. Legal groups working with editors of legal agreements and standardized contracts and underlying data structures at the beginning of the life cycle. And that will give benefits. They may not be in the billions, but it will give benefit. Later on down the life cycle is where most of the technical architects who are working in this space are looking to optimize. So I think all players in the life cycle have an opportunity to contribute to optimize.
Chris, where do you see applications immediately?
That's what I'm going to say again, just what he said. The reality of it is that you, and I think Lee's right, that you can benefit from various processes and putting that onto the distributed ledger, but you're going to get the biggest benefit if you're booking a trade or recording the trade once and then using it multiple times without actually sending the data to different, risk systems and sending another data to a back office system. And so the more you put on the ledger, the bigger the benefits are going to get. And theoretically, there's no reason why you couldn't do from execution all the way through to when it when the trade dies and everything in between.
Cyril?
So I see the result, and I say, people, wake up. Trading, platforms, straight-through processing, automation, collateral, everything. That's what we need. Those are the boxes we need to tick. But this is not what it is about. It is about data. It is about artificial intelligence, and it is about a new way to communicate. This is where the future and how our lives are going to change. Of course, we need to be more efficient. And this is happening, this is going to keep on happening. But the priority of all of us should be to think about how the world is changing and is going to change with the growth and the awareness of data. And I'm going to give you a concrete live example about what I mean and what we are doing, and we are not the only one of doing that. I'm looking at the corporate bonds market. I mean, I don't know how many of you are familiar with the corporate bond market, but you know, it's thousands of QCIP, and it's an idiosyncratic market. It has been a market that has always been complicated to find the right bond at the right price at the right time. So now what we realized is that we, and I'm saying we BNP, but really we global bank, we have a lot of data. We have a lot of data internally, and we have a lot of data externally. So we start putting this data together, and we start analyzing it. Long story short, we now have an intelligence artificial driven system that can, for any customer, give us the highest probability bond that he has an interest in, and for any given bond, that system gives us the highest probability customer that will be interested in that bond. That leads us to much, much better efficiencies, changing the journey, as I was saying. Salespeople make one call, but instead of 25, but they make a call with 80% probability of success, and it's working, right? But think forward, think forward. The OMS of the customer could be linked to directly AI engine from different banks and constantly find the bond, because we constantly have the best probability to meet, and we can exchange that, and we can streamline that all the way. So I think that's where I'm really getting excited. The rest is, let's tick the box.
Mike Gill, we have people very worried about trading technology and processing and automation, which are clearly regulatory drivers. Does this change your perspective and how you're thinking about things at the Commission, or not that you speak for the Commission, of course?
Right. Well, so I was looking at the question, though, and I was saying instead of firm, okay, for the agency, so I have a much more parochial response, and it follows in line with Cyril's. As an agency, big data readiness would be, if I could create a budget line item, it would be to create an enterprise risk management system for the agency. We have 4 divisions, and when we looked at all the data that's coming into the agency, much more than we can process in a real-time basis, our initial thought was, well, let's look at what's important for systemic risk. Rather than having 800 different fields that we're asking market participants from, what can we really focus on in the immediate term, and what leads to systemic risk? That's what, as a market overseer, we should be concerned about. And then we drew from the 4 divisions. When you think of systemic risk, what are the fields, what are the information you need? And surprisingly, I guess it shouldn't have been a surprise, they all look at it completely different. Enforcement has a different view of what risk is than what our Division of Clearing has a view of. Our Division of Market Oversight has a different. And so I think for the agency, and probably most government agencies writ large in the financial sector, comprehending the data that we are asking to then be used, to be made useful for us and for the market would be something that I would like to see done in the next couple of years.
Before I just want to opine on that, because wasn't there a handsome commissioner at one point that did rearrange the data office within the Commission to try to bring a little more sense to that at one point?
What a mess that guy left us with. He got us money, but no direction. So.
Aimless, totally aimless. Jack, what does this poll tell you? What are you thinking?
Well, I think from our perspective, we're making investments in many of these different areas. But I would echo the previous 2 comments. What I'm very excited about in my seat is data, and how I can capture data and harness data and make myself a better portfolio manager and make myself smarter. Because that's what we're very excited about on the trading floor. One other thing that I'd like to mention, I think, as we talk about distributed ledgers and innovations in the far future, are some of the near-term product innovations that we're thinking about right now, that I think the market is making a ton of innovation in the options space. And I think about swaptions, and how on my desk, whether we're going to be clearing more swaptions and seeing more electronic trading of swaptions, there's just an example that's going to give this market a whole lot more visibility into vol. There's a lot of talk about volatility, and clarity into options skew. A lot more clarity into options skew as that's traded more. I think back to your polling question, Scott, from yesterday about what people are concerned about, and I think only 3% of the room said they were concerned about movements in interest rates, which might be an indicator that it's worth buying some vol.
You know, very much to Jack's point, you know, we at CME have invested quite heavily to be able to enable the clearing of swaptions and to be able to enable greater electronification of options in the marketplace. And at least for me, you know, I really appreciate all of our investments aligning to the priorities of the room. What I can say is, you know, as I listen to the panel, I hear a lot about the, you know, data and big data. And for us, it's not just a matter of data. I mean, we process 1 billion messages a week. For us, it's not just about persisting that. It's about creating information behind it and also using that data to be able to enhance market integrity. And just a simple example, when we talk about artificial intelligence, you know, one of the things that we're thinking about is how can we use that technology to enhance the markets rather than looking at it in, you know, from a customer standpoint, also not forgetting that there's a sanctity in the market that needs to be addressed and needs to be continued to enhance.
I'd like to turn to, go ahead, Chris.
So I was just going to add, I think that this is relevant to the previous question that you'd asked about tactical versus strategic investment, because I suspect that the top two are immediate issues that people are facing, and the rest of it is more forward-looking. So I think that that's probably why the answers are why they are. And I agree with everybody here about data being really the exciting area. But in order for that data to be useful, it goes back to the standards that we need.
Well, which is a very good question from our audience, actually. And by the way, this poll and the last poll it's all confusing. They're very optimistic about DLT in the next 3 years, but nobody's investing in it, which makes no sense.
They haven't spent the money yet, so there's still that optimism. Until you start spending the money, the cynicism doesn't come in.
Okay, very good point. So let me ask maybe a final question from, we've talked about data and we've indicated standards, and the standardization of process. If we've got competing blockchain systems out there, how do we just have to adopt one and that's the standardization of process? How do we have to think about this? Is there an interoperability? Where does the standardization have to occur to really leverage and scale all of this to make it quite effective? So you've got both a competitive marketplace from a technology standpoint, you've got process standards, data standards that can seamlessly utilize whatever new technology you want to use. What do we have to do? Is that a role for ISDA here? Is that a role for the industry to solve? Is it a role for, God help us, the regulators to solve?
So standardization, interoperability, variation of platforms, the topics I mentioned in a couple of previous answers. We've thought about these things really deeply. We've participated in many fora for these, ranging from for example, Linux Foundation Hyperledger Forum, where they have a number of different distributed ledger platforms, and the aim of bringing them together is to identify commonalities and how to get these things working. You may, for example, be aware of a recent Hyperledger initiative called Composer. And what that looks to do is to define at a high level in technology some data attributes together with some business logic in an abstract form that can then be deployed to different distributed ledgers. You have an Ethereum technology where people write in languages called Solidity. You may have the R3 Corda platform where people write on a Java virtual machine. They may use Java, Scala, similar languages. Each one of these platforms, they choose their own internal data formats. They write their own business logic and flows. So when we're talking about standards, interoperability, I think we need to take things up a level. And we need to start thinking, what are the commonalities across business processes? What can we define at a high level in a formal format that could be automatically run on a computer. Ideally, it wouldn't be low level so that only the developers and computer scientists could understand it. It would be higher level. So I think the way to achieve standardization and interoperability may not actually be the thing that many are looking at, which is identifying layers of abstraction and responsibilities between them and trying to get all the different stacks to do the same thing. That's a great aspiration, and for example, that was the OSI technology layer stack achieves that. But I think we can attack it from a slightly different angle with the data standards and some business process standards, and then allow the platforms to implement using those data structures. So although I'd say interoperability is a very hard, bordering on intractable challenge when you look at distributed ledger space, by attacking it intelligently as data standards and business process standards, rather than trying to sort out all the layers, then we can make headway. And I think that's what I personally will be spending a chunk of my time on in the coming year. And I look forward to others that also contribute in that way.
Chris, do you agree with that?
Of course I do. Actually, I think your question about ISDA, there's no way that we can actually move forward with any chance of interoperability and without standards. And data standards in particular, it seems to be in the ISDA wheelhouse, and I know that that's something that you're looking at the moment. I guess the only thing that I'm interested in is whether or not interoperability is a theory that will actually be delivered on or not. I do worry about fragmentation. I do worry about the multiple solutions, and that at the end of the journey, we've just created another mess out of, which might be slightly less messy than the current mess, but still messy.
So I guess I would be more focused on the real life answer than the technical part of it, because everything Lee mentioned is spot on and very well laid out. But what does it mean in real life terms? How are we going to make it happen, right? So is the body to make it happen? I would think we should definitely give it a shot, because I think ISDA is one of these forums where the whole industry comes brainstorm. Now, are we only talking about derivative? Probably not. The interoperability and data standardization and convergence is wider. But ISDA could enable it, could facilitate it, could create a real working group with a real goal. Yes, I think we should give it a shot. Right?
Mike, maybe pull back a little bit, not so CFTC specific. When you hear the comments around data standardization, process standardization, how can the regulatory broadly, whether it's IOSCO, CPMI, FSB, how can they be a partner in all of this?
Well, the quick answer is, boy, if we could just figure it out at that level, it would be easier for everyone. My fear is that if we leave it to that groupings, we're going to pick on the wrong reasons, and we're going to pick some technology because it made sense to regulators, and it maybe most likely won't make sense to the markets. And so I think we need to, obviously, there's reasons we want standardization in transactions and products and such. There's a rationale for that these international bodies must continue to get some harmonization on. But I would like to see there then be a gap between what we do in terms of harmonization of standards and what entrepreneurs do in terms of coming up with the best mousetrap. It would be, I'm sure, helpful for many, for us, the world regulators, to pick X technology, say that's going to be it, and then everyone can start investing there. But I just don't know if we have the capability to do that. We ought to stick to asking for things that'll help us harmonize and do our jobs better on a global basis, and then hope the innovators can work around that. My 15-year-old sent me an interesting, you get all these things from kids from the early days of the internet, and it was in 1988, you were told not to talk to strangers on the internet and never get into a car with someone you don't know. And in 2017, we used the internet to call strangers and pick us up. And But if you, in 1988, if you had said in the early days of the internet, what's the goal? I'm like, well, I want a system that would allow me to pick up my phone and push a button and have somebody come to my house and take me somewhere without having any involvement in worrying about paying or anything else. The early innovators of the internet would say, well, that would be really hard. Like, how are we going to get to that? And so the internet, from the government perspective, developed, on the one side, it was do no harm. We didn't tax it. We didn't immediately try to find a revenue source. We didn't immediately decree, sort of how consumers should use it. But it also was a lot cheaper for consumers to engage in the early days of the internet for things they wanted. You had the Gopher, remember the old University of Minnesota Gopher browser, and if you were interested in looking up lyrics from bands, you now had a place to go. If you liked REM, there was a place on the internet that actually had the lyrics from REM songs, but it didn't cost a whole lot. And I think the difference with what we're talking now is those early iterations that came and went had their fans, people loved them, and then something else better came along, literally better, and so people invested in that. The amount of money it takes to invest in some of these technologies is such that you really, once you make the investment, you really hope something better doesn't come along at that point. And so I wonder if there isn't, the internet benefited immensely from, and I don't want to get in trouble with my European brethren on who invented the internet, but the Pentagon's use, the sort of the U.S. having authority over the domain names in the early days really helped that process along. And so as much as I worry about us picking the wrong technology, I wonder in this case where there's such huge investments, if as we ask for standards, that should be in our minds as we're doing that.
Yeah, just to add one quick thing very much to where Mike was going. It is bizarre to think that Uber can actually be more secure even though you don't know who is actually driving you. But I think the most important thing, and I think ISDA's been a great leader here, is about thinking about the endpoints, thinking about integration. Rather than thinking about interoperability, making it easy for people who have invested in technology to be able to reuse that technology. So if you look at FPML, it's been a wonderful enabler to be able to have people integrate very quickly into varying endpoints without having to do a lot of work. And once again, if we don't look at DLT as the goal, but if we look at it as an enabler, and we look at it as the integration of the endpoints, we won't have to worry about what technology choices we make because we'll know that whether you're using Windows or Linux, whether you're using a web service or TCP, it will all just work. And that's really what the outcome should be.
And lastly, with always a mind towards market liquidity, because we just always have to keep focused on, we don't want to invest in things and wind up fragmented. So it's going to require, collaboration and continued engagement.
Terrific. Well, that actually brings us to the end of our time. We could go on and on. I think there's a lot of things to unpack on standards, on different technologies, artificial intelligence. The good news is there's another panel, a breakout session, that if you're interested in discussing this further in ISDA's role, we have a breakout session this afternoon. There are a number of other very good breakout sessions as well that I encourage you to join as well. So this does end this panel. I want to thank our guests, and if you would please thank them as well.